Hey, welcome back to Day Trade Indy.
Dude.
This is Ben Jones and Kyle Sherwood.
Dude. Sorry, I'm going to cut the intro. Oh, man.
What an incredibly weird week, right?
What a weird 2 weeks. So they always say that the back side of the move happens 10 times faster than the front side of the move. We wiped out 2021 right there in 9 days.
That's crazy.
I mean, just wiped it out.
Yep.
Not you and I personally. You and I are still in the green.
Right.
Not nearly as much as we were. But for a couple of, for an amateur trader, I take it very seriously, but I know 1% of what there is to know. For us to still be green when, Kathy Wood's ARC fund is down 20% on the year.
I think that's saying something. You gotta give yourself a little bit of credit.
It's the only thing that's keeping me sane. It's like I was telling you earlier, it's like you sit there and you don't know. So I've always made fun of people that say that experience, nothing matters more than experience, because I come from sales.
Right.
And human psychology and talking are, I can do that.
Right.
I'm good at that. So I was like, that's just something that people say who can't sell shit. Like, I'm lapping you. I don't have any experience. I'm lapping your 20 years experience. I'm destroying in year 1 and year 2 and year 3. And we always did, right?
Right.
Boy, this trading shit's hard, man. Oh. So you sit there by yourself and it's like, you can research, you can read, you can get a million different opinions. There's a million ways to skin this cat.
Look at a million different graphs. You can
read a million articles and
blog it.
One says, sell it all and wait for a green day. The next one says, keep buying the dip. The next one's, well, what happens when you buy the dip and it keeps dipping?
What's a huge dip called? That's called a scoop, right?
It's called, yeah. You can't just, not everybody's a millionaire. You can't just keep buying.
Mm-hmm.
If you give it 30% and double down,
yep,
you kind of need it to go up at some point. Well, then when you go another 30%, you're like, okay, I'll double down. And then it's like, oh shit, dude,
So I think you're really talking about the psychological warfare that the market does on you. Tremendous.
The struggle is real. This morning was both the angriest I've been at myself since I played basketball. This morning at myself personally was probably the angriest I've been 20 years.
Because
at the time, so we're gonna do these recaps. We've got our editing down to a point where we can do more current content and we can do these recaps for new traders. Hopefully, you guys see this before you make the same mistakes that I do, or still do. What the hell do I know, right? But this morning, what is it? Friday the 5th.
Yep.
Friday the 5th. Look up EYES. EYES. Just take a gander at the chart, see what it did. Ask yourself, who could possibly have lost money on that runner? This was free money. Who in the world could have possibly, under any circumstances, been so bad at trading and life in general that they lost money on a 500% stock? Ask yourself that. This guy's doing a podcast. He lost money on EYES. Why would I ever listen to this? Good question to anybody listening. But here's what happened, right?
I was going to say, what the heck did you do?
This is what it was a paper cut. I didn't lose $10,000, but here's what happened. It's the psychology of it, right? So for 9 straight days, we were red. It messes with your mind in ways that like I said in one of our earliest podcasts, when the stocks are going up, you don't ever think they're going to come down.
Correct.
And no matter how strong you think you are mentally, when like, dude, it's just like, okay, today, one of our positions will be green today. Like, something good has to happen. Like, you wake up with hope and energy, and you're like, this market's going to be great. And then for 9 straight days, it's just red, 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 red. And you're like, well, the world's ending. So what happened is I was, and this is all stuff that is invaluable. I've learned more about trading in the last 2 weeks than I learned in the previous year, because you don't really know what you're made of until shit gets hard, right? Like, I think there was another video where I said any chimpanzee can throw money at the stock market right now and make money, right?
Right.
You don't really know if you're any good till, shit gets weird.
Yep. Mm-hmm.
So I was just about ready to sell off. I was just about ready to throw in the towel on about half of our positions. And I talked myself out of it, and I'm like, quitting now is like giving up now. I mean, you can't give up now. If you were going to give up, you should have gave up 10 days ago. Like, I don't know if it's diamond hands or just stubborn or like,
right.
But it can't be read every day forever. It just can't. That's not how it works. So, but I was more conservative just from my behaviors and more risk averse than I've ever been, because I didn't want to go into the red.
Right.
I'm like, okay, like, so I'm going to commit to my thesis on our positions right now. These will be winning positions sooner or later. Patience, if Walmart sold patience, I'd buy all of it because I don't have any. So, pacing around my...
So here's the key, though. What the heck did you do in order to get through that? Because that's what new traders are going to want to know.
Well, let me get through the story. So
okay.
I did not sell the positions that I was just going to say screw it for. Then I saw a setup for eyes. And I'm like, this thing, I just got like the FDA just approved. The way that I understand it is basically they're going to help blind people see. They've come up with the technology to help blind people see.
Oh, man, that's awesome.
So the chart looks incredible. It's got all the volume in the morning. Rewind 2 weeks when we were, when I was Warren Buffett.
Yep.
I would have hammered this setup with no remorse.
And it looks beautiful. Woo.
I would have murdered it. But the stock market opened and sank like a rock. The NASDAQ fell, made yesterday look like a tickle fight.
Right.
So I've just made this decision to hold these. They are crashing. I mean, it's like you jumped off the Empire State Building. They're falling so hard.
Yep.
I'm watching our P&L I'm like, oh no. And now I'm trying to concentrate on a new position that's extremely volatile with a ton of volume. I took a very small starting position, but it wasn't small enough because I was so nervous about unsure of, you don't know until it's happened. So yes, I've put in a lot of time and effort. Yes, I've studied. Yes, I know why every single stock is in our portfolio. When it's dropping at the speed of light, it makes you question every thought you've ever had.
Now, did you have eyes on your watch list already, or what was going on?
I was watching our positions, and we're 60% cash right now.
Right.
So we're 60% cash. So I took a starter in eyes.
But did you have it on your radar like the night before, or was it
just the scanner? The same routine that we talked about in the morning. So I woke up, I went to my pre-market scanner, I was scanning the news, I was going through each and every one that had the volume. Now, when we first started this podcast, my pre-market scanner had like 500 stocks in it.
Yep.
And I had never seen less than that because, I'm part of this penny stock boom like everybody else, for real.
Yep.
There's like 6 stocks in my pre-market scanner now that qualify.
500 down to 6.
500 down to 6. So you don't think volume and like optimism and confidence
you having to focus.
Yeah, right? So as the positions I decided not to sell are crashing morely, bigly, more than the last 9 days, every bounce in eyes in my new position scared the living hell out of me. And I wasn't buying at support. I was letting it confirm, and I'd take like 300 shares.
Yep.
And then it would tank like 80 cents because it's so volatile. It's going right back up.
Yep, and it did.
But I'm like, oh shit, I gotta sell. And I was so
So it sounds like the key is the psychological portion, but it's also, you got to know why you're there. And
I knew I was there.
And it was good, and it was great news.
This is why 90% of professional traders fail. You throw this kind of pressure along with the PDT rule, which thank God we don't have anymore.
This is why 90% of non-professional traders fail.
Everybody who takes a shot at it professionally, 9 out of 10
Oh,
fail.
gotcha. Yep.
You can't... You have to put yourself in a position to where you can either set a stop loss and live with the results, be mentally and just have the stomach for acting as if you're not down.
Right.
Right? Because if the market was a bull market again, we'd have made 20 grand on eyes.
Yep.
I wouldn't have thought twice. I'd have bought 1,000 shares to start. I would have been scaling in. I would have had all of our cash in it before I scaled out of it. It would have been the biggest winner ever.
Because you have like several great runs on that today.
It was easy, but here's the thing. While your P&L is slamming down,
right,
and every tick is $50, $80, $90, $100, you're up 200, you're down 200, you're up 200, you're down 200.
It's causing you angst.
It
reaching
makes
for the Pepto.
Think differently.
Absolutely.
So, long story. So the reason I was so mad is because I was waiting for the second candle to confirm. Now, of course, I picked the absolute worst spots. So I did exactly what I'm not supposed to do. I was in no man's land. I did exactly what I know I'm not supposed to do. I was in no man's land. It bounced up. I was like, oh, we're up $250. Knife. Oh, shit, we're down $250. Well, I can't lose $250 because the NASDAQ is crashing like the Titanic.
I get it, man. I get it.
So I sell. I'm like, screw it. I'm not doing it anymore. Then I take it off my watch list. And I'm like, just don't look at it. Don't look at it. Don't look at it. Don't look at it. It crashed. There's no way. The market's tanking. There's no way. You're fine. I go back to it. Up 151%. Oh my God. I'm up. It's up $1 since where I sold it. And how did I not make money on this stock? So what do? I do the exact same thing again. It was like 10:15. I was madder than like 9 hives of hornets. I was so pissed off. I shut the laptop. Went and played, literally left my house, didn't look at it for the rest of the day. And guess what happened? We're up 10% today.
Yeah.
So it's a catch-22. I was right not to sell this morning because if I would have sold the positions I was looking at, if you look through what they did today, they're up like 40%, some of them.
Yep.
That would have really been a bad decision.
Exactly.
But trying to figure out how to stay, oh man, I don't know, man. Like I said, it's not basketball, it's not sales, it's not human psychology, it's not reading a person. I am overly confident in my ability in those areas, right? Like if you're like LeBron's better than Michael, I'll just sit there for 3 hours destroying everything, just destroying you. And I probably won't be your friend anymore because if you think Michael or LeBron's better than Michael, you just shouldn't really talk basketball. But when you're doing this and you're trying to do it seriously, and you're in this sell-off that's not the Great Depression, it just destroyed small caps. It destroyed small caps.
So what are you feeling is like the big reason for what's going crazy out there?
It'll come off as like conspiracy theory or whatever, but the hedge funds turned off the algorithms, and instead of buying, they were shorting. And there's nothing you and I can do. There's nothing retail traders can do to combat the.
Because you know,
it's not illegal, so manipulation is a tough word.
You and I talked about this before.
It's not illegal. But when Goldman Sachs and Merrill Lynch and the Citadel and all these, you know, and the Bill Aikmans of the world and
the big companies,
the Dalios of the world, when they decide that there's a correction and there's more money to be made on the downside than the upside, they just turn their computers and go the other way, and then they hammer it down to a technical support level. You don't exactly know where that is. I think coordinating it would be illegal. There's no proof they don't. But if you look, every single day for the last week, there was a small pump fake at the open, like a small uptick to give people hope and make them buy and get it back and chase.
It's so true.
At 9:45, almost every single day, it fell out of the sky. And at noon-ish, when nobody's trading, retail traders don't trade at noon. Most of them are momentum traders and trend traders. Magically, you get a big, giant uptick. There's
Gets everybody excited. Hey, what's happening? I'm about ready to jump in again.
And then right before the close, they crash it again.
It is nuts.
The pattern was the exact same for the entire week.
Man.
So here's something that I learned that actually helped us. So I got a whole list here. So first and foremost, and I'm still figuring this out for myself, but you need to figure out what style works for your personality.
Oh, absolutely.
You're not going to know what that means because you're going to want to see results, and you're going to want to kind of feel, felt, found. I've done that. I'm still doing that. But the bottom line is, and this is where my conundrum is.
Man, it's a big word for you.
Rude.
Conundrum.
I am good at the thing that doesn't fit my personality. I am a better swing trader. So I am better at finding something that is oversold now and selling it in 3 or 4 days, right?
Right. I'm
better, like, objectively at finding that setup. But my lack of patience,
confidence.
No, it's not. It's literally just a type A. I'm just a type A. Like when I go shopping, I know what I want, and I don't shop for prices. I just get the shit and go home. The football game's on. Like I don't want to talk about it anymore. Like I'm not. Let's go, people. Right? Like I'm not like.
So you're a better swing trader.
So I'm better at. So if you're a swing trader with no patience, that doesn't help you.
Right.
And if you suck at momentum trading, but that fits your style because it's instant gratification, that doesn't help you.
Exactly.
So I'm caught in this between a rock and a hard place where it's like the positions that I wanted to finally give up on this morning.
Right.
So I'm growing. I didn't sell them. I gave us a paper cut on that eyes thing, and I was only mad at myself because how do you screw that? Like, like you look back and you're like, how did you screw that up? But again, if you sit there and you think, we were up, like I said, dude, 2 weeks ago I was Warren Buffett. Now I'm like, oh man, like this is hard.
Really questioning what you did.
So as I'm basically confirming to myself, now you got to think about me in real time, right? I've just decided not to sell these, and they are screaming south.
Right.
So now I'm second guessing that while I'm trying to be clear-headed on a momentum trade, even though it's an incredible setup, And all I can think of is these can't go down 40 frickin' percent and this doesn't work out because now I'm in real trouble. So seeing the results from today, now I have a foundation that I can look back on and remember what it was like, how we handled these incredibly bloody 401k destroying, moves. I was right. If our positions would have screamed up yesterday and eyes would have happened today,
different story.
We make 20 grand. 20 grand. 20 freaking grand.
So you told the great story of the hedge fund manager and how she just came
Kathy
on the
Wood.
news. I think that's worth repeating.
This is why I didn't sell this morning. This is literally, if I wouldn't have seen this, if I wasn't just looking at everything that I possibly could, I would have panicked. But they interviewed her name's Kathy Wood. She manages the ARK fund. It's ARKK. It was the ETF of the year last year. It's all the stocks that, I make fun of and just say, oh yeah, anybody can buy those and make money. But it's Teslas and Apples and Neos and Palantir and, it's growth tech. She erased all of her gains from 2021. So all of January and February gone. And I think she was down 21%. And even the guy on, I think it wasn't CNBC. Maybe it was. I don't know. It doesn't matter. He's supposed to say, buy the dip and, sell the rip and, let's, what, blah, blah, blah. And he's just like, well, how do you feel about that? And she's like, this is great.
I love that.
And I'm like, this psychopath? Like, what do you mean? She's like, well, what are you talking about? He's like, well, Tesla's off its highs almost 200 points. Like, it's down in the low sixes. And she's like, yeah, buying more. Buy more.
I love that.
And he's like, yeah, I noticed yesterday you increased your position by like 2 million shares or something like that. And she's like, yeah, it's like 2.5. And I'm like, okay, I think there's a lesson in here. She's laughing. I'm over here like second guessing every, like, am I stupid? Like, should I just do it all wrong? She's down 21%, damn near celebrating. Like, bring it on. Like, drop it more. What are you going to do?
Because she completely understands, man.
Go ahead, sell the fund. Have
Everything's
fun.
on sale.
She actually said, I'm going to buy while everybody's panic selling. And I think she didn't say dump her shares, but she said, and then I'm going to sell it to them when Tesla's at 2,000. She's like, what are you, crazy? I'm just sitting here thinking like, okay, so this woman's IQ is like 9 million. She's the head of
head of a huge hedge fund.
Huge.
And she's celebrating because now she's buying everything on sale.
And laughing at guys.
Absolutely.
She's like, grow up. Like, what do you mean? Like, you thought it was just going to go up forever? And I'm over here like, uh-huh. Yeah, I thought it was going to go up forever. And I didn't think it was going to go up forever, but I had never seen, I only have a year of like watching charts, I've got 3 years of even having any clue about what I'm doing. So I'm like a product of this penny stock boom too, right? So like, bad days were like, okay, we had a couple, September sucked. There was actually the pullback in last September and October was twice what this one is. Not saying this one's over. We recovered at the end of the day. It could keep going down on Monday, right? Like this is, I can't foresee that. I'm not a fortune teller. But this wasn't exactly the end of the world in comparison. But like I said earlier, this is the one thing that I've ever done where experience matters. And if I hadn't seen it, if I hadn't experienced it, if I hadn't survived it, if I'd have just panicked and just said, screw it, this is too hard, and we just went on with our day and, be
another story.
It would have I wouldn't have the confidence moving forward that I have now for it literally just living through it.
What do you do now, though?
So you must. This is what got us. So we would actually we'd be up even more if it's hard, but you have to have 40% in cash. Unless you are just brand new starting out, if you're a PDT trader and you have $10,000, no, that's even too much. If you have $1,000 that you're expecting to either lose or triple, you can put all of that into one stock and hope for the best. That's fine. What you should do is put 500 in a stock, hope for the best, and then be prepared for something like eyes to happen.
So you can jump on board. Then you keep your PDT, you keep your day trades. But if you use one of your day trades on eyes, you're a pretty happy person. Right.
You can 5X an account like that.
Right.
If you don't have the funds, you miss out on that opportunity. So the opportunity cost is great. It also, if you don't have the cash, you can't buy the dip.
So you need some dry powder.
You have to have, you have to have dry powder, exactly. If you don't, you will be caught off guard when the next correction or the inevitable real pullback happens.
And so these are real lessons that you have to learn, and you've got to keep that money in your back pocket.
Don't stick your finger in the light socket. Don't do... And again, we had money in cash. We didn't have enough. Because in this scenario, I bought the dip, and it kept freaking dipping. So by the time I bought enough dips, I was just like, well, it's all on the street. Like, what do I do now?
You're ready to go. But
now I got to figure out what I'm going to short, or what I'm not short, but what I'm going to shave off, because I can't have no cash.
So this is like a big poker thing, I think, because I'm not a poker player. But isn't it the same? You can't kind of go all in early, because if you lose it all, you're done.
Yeah, and again, like me and probably anybody who gives a shit about this podcast had never seen this before, really.
Right.
So our experience with a correction is like some stuff goes up, some stuff goes down. Basically it's, I might have a red day, but it's like, I lose 10%. And then the next day we're right back at it.
Right.
This was...
big. It was big.
Every single it was enough to take down the ARK. Like the ARK fund is down 21% of the year, and those aren't penny stocks. Those are, that's Tesla. That's 401k stuff. That's retirement stuff.
I got my butt handed to me on a lot of stuff.
So again, people can sit out there and be like, well, if you'd have just invested in real companies, you could have avoided that. Nuh-uh. There was no getting around this correction. But if you have the cash on the side, you can at the very least, rest easy knowing that it's not exposed while it's crashing. Maybe you aren't the type of person. Maybe your personality, maybe you get nervous when you buy the dip. Maybe you want it to just sink all the way back down and you're just fine. Like, I've got this much money in a stock. If it goes to zero, I lose it. I'm not putting any more money at it. We'll see you when it, we'll see you when it comes back up. I have all the time in the world. If you have that kind of patience, do you?
Because the ARK fund, just to put it in perspective, I'm just looking it up, was the 52-week, 52-week low was $33.
Mm-hmm.
The 52-week high, which really wasn't that long ago, what are we at, I don't know, February 12th, like 3 weeks ago?
Uh-huh.
It was like almost 160.
Uh-huh. What's it traded at today?
118. Yeah. So you're talking about 42 points off.
Oh,
which is a good 30, 35 points.
And guess what?
In 3 weeks.
Again.
And this is
I'm not a licensed investor. This is just my opinion. But in my personal IRA, I will be hammering the ARK fund. Hammering it. You think this lady's, you think she's laughing at us. She's like, dip it more. Dip it more. I got billions. Dip it more. Go ahead.
3 weeks. She's down over 30%.
Mm-hmm. Wiped out everything from January and February.
Yep.
The backside of that move was literally like jumping off the Empire State Building. It was horrible. So you can do one of two things. And this is where...
But you know what I also think, though, Kyle, is that, if you don't have the stomach for this,
there are going to be a lot of these.
And you're never going to know if you have the stomach until you experience
it. Because, we talk corrections, that's double digits down. And double digits down, you're going to see these things, and you're going to see them a lot more than you probably think you are. So if it's going to freak you out, and you're going to get into a month or even a year, or there's been stuff, I was talking about the other podcast that was 4 years after the depression for the thing to actually start moving in North Territory, because for 3+ years, it kept going down.
Just kept going down.
You talk about a mind F, that would be it right there.
And here's the thing. If all your money's on the street, you're in trouble.
Yeah.
So if you have 50% of you got to have at least 40%. If you have 40% of your money left over, even if you do have that Great Depression type tank,
yep,
you can turn 40% of your original account into 500% when it corrects, because it will go back up.
Right.
You just have to be there. You just have to be, you can't be out of the game. You can't cut your legs out from under you.
And some of the stuff that you actually showed me was the fact that, hey, dude, you need to kind of not look at it for a little while. And I remember my mother-in-law's neighbor, right across the street neighbor, they, what was it, 2008, 2009, just freaked out, sold. And within a relatively short period of time, a year is not a long time.
Nope.
And the guy just got chopped, man.
Yep. Now, here's another thing. And this is also back to your personality, but you must trust your gut. The hardest part about this for me is that it's an area where I'm not as confident. It's really like the only area where I'm not just stupid, basically arrogant.
Yeah, but I don't even know if that's actually true, because you have to just be confident in what you've chosen.
But my gut told me, my stomach told me 3 weeks ago to go 100% cash.
Now, not everybody's going to have that gut, though.
You do. I disagree. I think everybody has intuition. Lack of confidence will make you not trust it because you think somebody else is an expert in something that you don't know as much about. and there are scientific studies that prove that listening to your gut isn't just a myth. That's attached to neurons somewhere. It's right a lot of the
Really?
time. Yes.
I didn't know that.
It's a real feeling. You can't argue that. When your intuition is dude, this doesn't feel the same way that it felt yesterday. Sell it, you'll be fine. But here's what happened. This is what because guess what? The people who got shaken out on this dip,
yep,
there's going to be a new group of people that are watching right now, and they're going to catch this run up.
Right.
So there's going to be a whole new group of people that don't know what a dip or a correction feels like, and they're going to be thinking about how much money they can make as opposed to how much money they should be saving.
Right.
And this is a lot like poker. Saving money, protecting your account matters exponentially more than how much money you could have made.
You think you could make. But so
or you thought you could have
what
made.
I heard you say is you got to take a step away, but you got to, take whatever you have and make adjustments,
yep,
which is the cash positions, things you're maybe not 100%,
yep,
into and strong about. And then you take the breath, which was you walked away, you went and played some golf, and you did some other stuff.
Yep.
So I think that resetting of the mind is huge. when you're trading because the constant hammering on your own with the noise can just be absolutely beyond brutal.
Yeah, and in a bull market, we're popping bottles, we're laughing.
You're calling your friends.
Yeah, you're like, I made $50,000 on eyes and I lost a little money here.
When was the last time you called somebody and said, "Hey, I lost $20,000 today"? You don't do that.
You don't do that. You don't call. Yeah, Kathy Wood does. Yeah. Kathy Wood's my freaking hero. I didn't really know I had heard of her and I knew about the fund and everything, but once I saw that interview, she was doing all she could do not to just laugh and just be like, yeah, so these idiots are selling. That's dumb.
Kathy Wood, here's the headline on CNBC. Kathy Wood is happy about Tech's recent reality check as she buys more shares of whatever. More shares of her core plays.
This guy was like, Tesla was the main one, Tesla and Palantir, and she was like, You don't think Tesla's going to go back up? Like, what are you, stupid? She's like, have you?
It's down like 200 plus points.
Yeah, she's like,
Tesla.
She's like, Elon Musk is the CEO. Like he's literally the smartest man on the planet. Like it's going to be fine. Like it's going to be fine.
So Kathy Wood's ARK Innovation Fund drops 14% on week, wiping out all 2021 gains.
Yep. Here you go.
14% week.
Yep.
Ow.
Yeah. It's incredible, man. If I wouldn't have seen that, if I wouldn't have been in the game, I would have sold everything. Here's the thing. If I would have panic sold everything this morning, it wouldn't have made me feel better when I opened up. It would have made you feel it would have made me feel
so much worse.
I'd have felt even worse. So, you know, and in the moment, I was livid. Went and played golf, trying not to look at it. My buddy who I play golf with was like checking in on this one stock that INND has to go up.
But it had a great day today.
Had a great day today. We forgot that it could go up. He's just looking at me and he's like, Kyle. And I'm like, I bought more. So I was selling off some stuff, buying. So I wasn't taking our cash and buying the dip. I was selling off positions that I didn't believe in as much to buy the
Which
dip.
is just what I said.
Which is totally fine. I wish, then you get the FOMO. It's like, well, what if that one goes 9 million%? Like, I just got to get over it. I just have to deal with it. Like, I'm going to sell stocks that go 10 million%, and I'm going to buy stocks that drop. I have to protect my core. I have to protect my capital. And be in the game when good shit happens. If you're not in the game when the opportunity presents itself, you can't dig your way out and you just cause more problems.
And I can't actually name all the stats, but day trading happens a lot quicker. We all get that. But
bad at it. I suck at it.
If you look at the last like 30 or whatever, 40 years, there's some crazy statistic that if you look at that period of time, you'd be up 200% long term, right? But what they say is if you are out of the market for the 3 biggest days, then that 200%, and I'm making up the numbers, and we're going to have to look at it. The 200% turns into 45%.
Yep.
And it's like some stupid, like small number of days. And I guess the point that I'm trying to make is
Warren Buffett said it doesn't matter if you hit every bad day, you just can't miss the good days.
You cannot miss the good days. And I think that's the thing we're trying to drive home is, we don't know what tomorrow's going to bring, but you have to be in the game in order to win it. Yep. And so you've got to stick to it.
So here's another thing I want to talk about. Okay, all jokes aside. I learned another thing this week that just really, really, really saved us. So I wasn't leveraging and utilizing the power of SPY, the comp index, and SQQQ.
So tell us a little bit more about that.
So SPY is the underlying derivative of the entire market, basically.
Sure.
As SPY you'll notice. So if you have charts, if you have the ability to have charts, if you have the SPY chart up, you will notice that when SPY is going up, your stocks are going up. Like it's all intertwined, right? The stock we talked about today, I was real mad about, but there were a ton of positions earlier in the week where I was in solid day trades and we made money and they were good. I bought low and sold high. But I was able to do that because I was buying when SPY turned up and selling when SPY turned down. I wasn't even looking at the stock that I was trading.
Gotcha. Because you knew that was an indicator.
Because they were trading. I remember I sent you that side-by-side photo. Like,
it looked exactly the same.
Visalink and SPY were doing the exact same movements. Total coincidence. Definitely just a bunch of retail traders. Just total coincidence that it's moving identically. So I'm sitting there, I'm like, okay. So then here's another thing that you'll never hear about. You could scour FinTwit
financial Twitter forever, you'll never see people talk about hedging. Well, I shouldn't say never, but very, very few people are talking about SQQQ and hedging your positions. So SQQQ is the inverse of the market. So if you don't know how to short sell or you don't want to worry about short selling, if you want to short the U.S. economy,
right,
you bet you buy SQQQ, and it's affordable. It's like $13. I think it's probably now $16 a share, something like that.
Yep.
So if your positions are crashing and you have enough money on the side, you can buy SQQQ and just hope it offsets for a day.
Right.
You can actually hedge. It is a very
Absolutely
smart, practical, and solid way for you to take a ton of stress off of your shoulders. Now, I was scalping SQQ, which just means very short, in and out.
Right.
Like buy one candle type stuff, or just like 3 candle, like buy low, sell the top. And I wasn't watching SQQQ to know when to get out. I was watching SPY. Everything I did Monday, Tuesday, and Wednesday was based on what SPY was doing. And it probably saved us 10 grand.
Dude, if you can trade on that one, that's a great indicator.
It's
up and down. Woo.
It is. So COMP is the NASDAQ composite. SPY is the derivative of the entire market.
Mm-hmm.
And SQQQ is the inverse ETF. You can also do UVXY, or I think SVXY. It's more expensive. It doesn't matter. But make sure that you are at least aware of those options and what they're doing, because they matter so much more than you might think. You might think that it's just whatever ticker was tweeted out or whatever alert was called out, and that's what you have to focus on. Don't forget that there's a much, much bigger picture, and you don't always just have to have your money in the right stock. You don't have to play bingo every day and hope you pick the winner.
I think what you're trying to really say is, hey, you got to do your homework and you got to know some of these pieces of information that really are going to lead your trades.
There are very, very few alert services that are ever going to go, well, guys, here's the thing. Like,
time to buy, time to sell.
There's a penny stock over here that's probably going to rip faces off and you can make $50 million. But make sure you buy VOO on every dip of VOO and retire responsibly. Like, that's not what any of them are going to tell you. And if you don't have somebody point you in the right direction, or at least make you aware, it's not always just about having the pressure on your shoulders of finding the winner.
Right.
Sometimes when it's all crashing around you, you can just go buy like 100 shares of SQQQ and go, go get a martini and watch the game. Like, you don't have to be dead on.
It's a little bit like when we talk about risk on, risk off.
Yep.
If you're pushing for the bull movements and you go SQQQ, and that's just the opposite, the bear movements, and you just kind of don't want to watch it, just buy it and then get out when you come back to the table.
Yep.
So
and don't try to momentum trade unless you are in it. If you have stress, if every candle matters. Here's one more thing. I had a whole list. Sorry. I know this is long, but whatever. My mom and your wife love this show, and they're going to watch every minute of it, so it doesn't matter.
I'm just sitting there talking about bathroom breaks, the bio breaks.
So I also changed something else that helped me tremendously. So back to finding your personality. I'm naturally anxious. Like, I don't want to wait. So I have switched my charts to 3-minute charts instead of 1-minute charts. Because every bounce of the 1 minute, like with eyes, right? Like every time it goes way up, it goes way down. It goes way up, it goes way down. It didn't really do anything.
Teeter-totter, baby.
Nothing net happened.
Yeah.
But 1 second it was up 250, the next second it was down 250, and it's really has. But if you move to a 3-minute chart, it's not so long that it's a 5-minute and you can't figure out what's going on.
Yep.
it's divisible by 3.
Mm-hmm.
So all of the main charts that you may use, whether it's a 15-minute, an hour, a weekly, there are going to be similarities that you can chart. They're going to be the same touch points through all of your technicals.
Yep.
And you don't have to freak out in highly volatile stocks.
1/3 of the times you get to freak out.
Right? Like, it's easier to watch. It's easier to read. It will help you tremendously if you have the same problem that I do, which is just, I bought it and I want it to go up right now, and I don't want to deal with the 3-candle pullback. I would just want it to go up, and it only goes up, and if it doesn't go up, I'm pissed and I want to sell. Because in the 3-minute candle, you may get 1 giant spike up, 2 little tiny candle pullbacks.
Right.
That'd be 3 in a 1-minute chart that makes you nervous.
But
because 1 went up and 2 went down, and you're like, oh my God, it's tanking. But on the 3-minute chart, it's just 1 green candle.
Right.
You don't know the difference.
Right.
No harm, no foul. Between that, making sure we're 60% in cash just because it's a bear market, and having SPY and SQQ up.
Mm-hmm.
I'm not exaggerating, man. Like, it saved us probably 30% this week.
No, I understand, man.
And it is an incredibly valuable tool for a new trader who doesn't know what the hell's going on in a market like this. It's serious. So for new traders that wake up every morning and think, I got to find the winner, because your emotions are fried. I'm a new trader in the grand scheme of things.
So how do you get back to the emotions being a little bit more stable? I know you take the walk away, but is there anything else you do?
Cash on hand gives you a floor.
So it gives you a little bit of comfort that
if 60% of your cash can't be touched,
then your overall portfolio is a little bit more secure.
Yeah. If you do that the entire time and stick to your rules, instead of getting greedy and just having, Lambos and dollar signs in your eyes.
Yep.
We would have been way better off if I'd have gone to cash sooner.
Right.
It's so hard not to think about Lambos when it's ripping up.
But you were also talking about you got to pay yourself a little bit too, right?
You do have to, that's a whole other thing. So that's a whole other thing we can go.
There's only so long we can go that people will listen to, but
we're going to edit this whole thing down, I'm sure. Again, all 6 of you, 5 of which are my friends. Yeah, I don't think that advice, paying yourself, I don't think applies to most people. Like, if you're above the PDT and you are making money, you should be paying yourself no matter what. I don't care if it's $50 or $100 or $200 or $45, or if you just want to see money go back into your bank account. But like, don't just sell it and hold it in cash. Actually transfer the money to your bank account. See your nest egg go up in some way, shape, or form. I don't care how nominal, how remedial, how small, how minuscule. I don't care if you have a $10,000 account and you send $100 back a week, then you send $100 back a week. But give yourself a little bit of relief instead of just never feeling like you make any money. Because in the grand scheme of things, if you're really trading, your trading account, it's like a bankroll in poker. I used to have 10 grand on me at all times, and people would be like, "You have 10 grand on you at all times. Why don't you want to go anywhere?" And I'm like, "Well, what if a 2-5 game breaks out with a freaking, what if we're double straddling and like now all of a sudden it's essentially a 4-8? Now I don't have any money. What happens then?" And
but that's my point.
They're like, "Who the hell does that happen to?" And I'm like, "Me." Literally 5 times a week. Like, have you not met me? Like, if there's a game, I'm there, and I don't. What if it's PLO? What if I got what if I need 10 grand? And they're just like, "You're 20 years old. What are you doing?" It wasn't 10 grand. It was literally $5,000. I had 5 grand on me at all times for like 2 years, and people were just like, "Why don't you ever want to go anywhere?" And I'm like, I'm gonna gamble this. And they're like, "That doesn't seem responsible at all." But your trading account's the same thing. If you have $100,000 in it, that's fine.
Right.
You can't go to Subway with that money because you have to be available. It has to be on hand for the next game, the next opportunity, the next whatever. So just siphon a little bit back off. Tell your girlfriend or your wife, oh, no, we're fine. See, I just made a deposit today. I just transferred some back. We're killing it. You and I, well, we were bad at that. We need to get better at that. That's advice that we're going to start taking as well. Because I don't care if it's $50. I just want to have something to look at and go, it's not so bad. It's going to be okay.
Exactly.
The world's not ending. Now, in next week's recap, maybe the world has ended. You never know.
That's right.
But we have 60% in cash. We got our eye on SQQ, so if it just keeps crashing, we're going to hedge.
Right.
The anxiety is going to drop. There really is something to be said for just holding. It's hard. It's miserable. You're never sure if you're making the right choice until it starts to go back up.
But at the end of the day, it doesn't really matter. It's just like you just have to believe that what you're doing is the right thing.
Yep.
Because you've thought about it before you got into it, and you're just moving with it.
Yep.
So.
And I truly believe that whatever your gut says is right, because it's directly tied to your personality. So if you're a screw it, I'm not going to risk it. I'm just selling everything right now, and if it tanks or goes up, I don't care. That's the right thing to do. If you're just, I'm diamond hands and I'm going to ride this thing. I'm going to ride this thing till it either blows up or we're rich, then that's what you have to do. But where you get into trouble is when you second guess yourself in the middle of it.
Yeah.
And you'll start to find spots where you're like, I believed in it yesterday, but today it's more pressure, because that happened to me last week. You know, when you have your first down 10% day and you're like, it'll be fine. We'll be back tomorrow. And then the next day it's 15% on that new total and you're like, okay, I bought the dip, fuck it, right? And then the next day it's like and then you're like, oh my, like maybe now, oh no. You have that your oh shit meter goes from 0 to 1,000.
Right.
And you're like second guessing everything. You're like, oh, maybe I shouldn't have held. Maybe I should have sold. Maybe I should have done this. Maybe I'll shave some of this. I
think it's all about knowing exactly what you're going to do and when. It's the discipline.
Yep.
So for me, it's a little less gut. This is what I'm going to do during this period of time, and you have to stick with it.
And the gut thing isn't about, oh, my gut tells me this is a good stock. That's not what I'm saying. My gut told me that the market was getting wonky. Not that my positions were sucked. I know every single stock we have, I know why we have it. That's the only reason I didn't jump off a cliff this week.
Yep.
I'm like, these are all oversold. Like they will be worth more than they were originally when I first bought them at some point. I know they will.
So all your indicators, your RSI, all that
everything's and regardless of that, just the due diligence I did before I bought them, right? Like even if I bought them on speculative reasons, if I'm in the OTC market, everything's speculation. So it's still gonna go up. It doesn't mean it's all gonna go up 50 million %, but it's gonna go up. If I wouldn't have done that research before I bought, this would be a whole different podcast. I'd be scratching my skin off. Like I'd be in a bad way. But what I meant for my gut is just my gut told me that the market was getting squirrely. And I just didn't listen. I was just like, it's going to go, we're ripping up like the like, look at how much we're up already. Like we'll probably be up another 100%. You know what I mean? Like, what are you talking about? Like we could be rich. Like we could be rich by June, right?
Sure, we can.
Your gut and intuition, if you're fighting that in any way, shape, or form, just do what your gut tells you. Because I don't know how much better off we would be, but we'd be better off.
Right.
And again, that comes back to the only way you can know is to actually live through it. So to all those people I told experience doesn't matter to, I apologize. I can still outsell you, but that's fine.
So what else you got on your list over there?
I think we covered everything.
Awesome.
Figure out your style based on your personality. Stick to your plan. Here's another thing. When the market is red, you need to sell faster. And this took me, so what, it was like 15 days, like 10 days of misery. Mm-hmm. So in like the first 5 days, I was just like, well, it's oversold and it's going up. The market doesn't have any confidence, so you have to adjust. 2 weeks ago, I wasn't holding long enough. Right? Like we were making 20%, but it could have been 50%, and if I'd have just held on a little bit longer. So it's like, okay, well now the market shifted, and I'm selling even faster than I did, but it wasn't fast enough because now there's no confidence in the market. So you just have to stack up tiny wins in a bear market. Right now it's a bear market. It's all going down. So when you make a momentum trade, you have to expect to make little wins throughout the week. You're not just going to wait for your indicator or whatever to tell you that it's oversold and then make a large make a large starting position, and then it's going to go back up 20%. It's probably going to go up 2 freaking candles
before it turns.
And then it's just going to keep going down. And it takes you a minute to be like, oh, I have to make this, like, I got to make these decisions quickly. Like, it is, if you're a momentum trader, it's buy, sold.
And I think what you're saying is you got to look at the environment. Mm-hmm. And if the environment is bull and it is pushing hard, you hang on a little bit longer.
Hang on just a little bit longer.
And granted, we don't know exactly what that is.
Based on your research. All based on what you're expecting. If an analyst says the price target's $100, sell that shit at $50, dude. Like, it's just some suit who went to Harvard, and that's fine. But like, and it's just a computer. Nobody knows. So if you're shooting for a price target, like, sell half of your position and YOLO the rest if you want, but don't just hang on for dear life. Because this, and again, knowing my personality, nothing. When I do something stupid that I could have prevented, that makes me the angriest, which is this morning. But a close second is turning a winner into a loser. Turn a winning position into a losing position, they're in anything worse. There's almost nothing worse, in my opinion.
Right.
And it was because what? Because why would you do that to yourself? Like, just sell half. I usually sell half at 25%. If I can get there. If I can't get there, then we scale out earlier. But if it's ripping in a crazy bull market like it was 3 weeks ago, and you can just throw it, everybody was Nick Papa Giorgio. You put $1 and you win a car. You put $1 and you win a car. So when that happens, hold for your catalyst. Don't see a squirrel. Don't let your instant gratification needs cause you to miss out on gains that you could have actually realized just by being a little bit patient. Go golfing. When the market's red, don't force things because you're trying to recoup everything that you just lit on fire.
That's a good point. Yep.
And go golfing. The moral of the story is go golfing. Boil everything down to this, just go golfing. I'm pretty sure it solves everything. Makes me feel better. But
I think you've covered quite a bit of things.
Oh, we've covered a ton.
And I think it's a good place to go ahead and call it a day. But it is a crazy market out there, lots of stuff going on, and we're going to hear more next week when we get together.
We'll have a recap next week. This one was just I had a lot. This is our first current video. This will be our first current video. This shit actually happened this week, and I didn't want to upload videos about us making it rain while everybody was crying.
Exactly.
Have us upload videos where everyone's making it rain and we're crying. So this will be current moving forward, and then we'll keep doing the topic oriented videos for educational purposes.
Sounds good, man.
So
thanks for
watching,
here, man.
Guys. Thanks for watching.
See ya.
Later.
Bye.